Hey guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about 3 stocks that I'm going to be buying throughout 2024. In fact, we're 2 trading days into the year, and I've already bought each of these stocks at some point over the past 2 trading days. Now, over the last week, I've uploaded a couple of videos. The first one was titled 7 Reasons Bulls Will Win Again in 2024, and then just yesterday I posted a bearish outlook video for 2024. Really the only negative catalyst that I can see upsetting the markets. And I just want to say, regardless of which scenario we get, I'm personally bullish. I think this is going to be a good year for the stock market. But if that worst case scenario plays out, I'll still be happy buying these 3 stocks that I'm talking about in today's video, because right now I view them as very undervalued, and if the markets crash, I just get to buy more at an even more undervalued valuation, if that makes any sense. But before we get into this, if you guys are new here or returning and not yet subscribe down below for me. Also comment a stock you are going to be buying in 2024. And let's get this video to 500 likes. It's been a while since we've gotten there, but I know we can. Now, you'll notice a common theme with each of these 3 stocks, and it's that they fit into 1 or 2 categories, either small cap or mid cap company. If you invested at all last year, you would know that the rally came as a direct result of large cap and specifically large tech companies rallying last year. Outside of those handful of companies, the markets didn't do much. In fact, there's a good chance that if your portfolio was made up of small cap and mid cap growth companies, your portfolio didn't go anywhere last year. That's a real possibility. However, this is what they call the Derby. It shows how each of these different indices and funds performed from the end of October until the end of 2023. And you'll see a common trend: small cap, mid cap, small 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 cap, mid cap, small cap. And then it's not till we get down the list 12 or 13 spots that the large cap index finally pops into the Derby. So we can see that there was a shift that happened at the end of 2023. I've talked about this extensively on my channel. Small caps and mid cap companies needed the cost of capital to peak. And what did it do at the end of October? The cost of capital peaked, which is why these stocks have started to perform really, really well. Now, the first 2 trading days of 2024 have been very, very red, which means these small cap and mid cap companies have also been red, as the cost of capital has kind of bounced back up a little bit, as the markets may have priced in too many rate cuts for 2024. But regardless, I expect the long-term trend of the cost of capital to go down, which is going to directly benefit small cap and mid cap companies throughout 2024. And this isn't even mentioning the fact that the Russell 2000, which is a small cap index, has been flat for 3 years. Small caps are due to have a good year, and I do believe that 2024 is going to be that year. Without further ado, let's get into stock pick number 1. Stock pick number 1 is a company that I talked about just recently on my YouTube channel. In fact, we're going for 10,000 views on that video, so that's pretty cool. But this is Flux Power. Ever since I uploaded that video, so just a few days ago, Flux Power stock is up 55%. So it's safe to say the viewers of my channel really like this stock pick, and I still believe Flux Power is very undervalued. In that video, I explained that I think this was a rare opportunity in the stock market, and I still believe that. Nothing has changed, even though the stock price is up more than 50% since I posted that video just a few days ago. I won't talk about it too much here, because if you're interested in the stock, you can go watch that video. It's a deep dive into Flux Power, but a baseline for this company is that they are a battery manufacturing company for the material handling sector. They create batteries for forklifts, ground support equipment at airports, also stationary battery storage for electric vehicle charging stations, batteries for warehouse robotics. The list goes on and on and on. This company has a lot of different revenue streams, and it's looking really, really good. The management team just this morning released an annual shareholder letter where they said in 2024 they are planning on being a profitable company, which is kind of crazy because even after the recent run-up, this is still just a $90 million company, which is crazy because that's almost exactly what the company is expecting its 2024 revenues to be. They also mentioned in that letter this morning that they have more than $100 million in high probability orders. That is not a part of their $30 million plus backlog. And I think what I like most about Flux Power is the management team. Ever since I started following the company several years ago, Everything they do has been with an emphasis on margin expansion and profitability. One thing that people commented about on my latest video was the company's lack of cash and the $15 million of debt that they have on their balance sheet. And I should have clarified this. The reason the company does not carry much cash on their balance sheet is because they don't need it. The cash they have is simply for inventory management. And this $15 million of debt comes from different lines of credit the company has, which is also utilized to manage their inventory. So even their debt is at very low interest rates when you consider the current economic and interest rate environment. So the balance sheet here is actually much stronger than it looks on paper. Now, would I prefer Flux Power to carry a little bit more cash than $1 million? Absolutely. But the fact the company is becoming profitable this year in 2024 really kind of nullifies that risk for me. We also have the fact that the company recently canceled their ATM, so they are not diluting shareholders, and there are only 16.5 million shares outstanding right now. But again, if you want a more in-depth video on what this company does, go check out the video I posted just a few days ago. Click the I in the top right-hand corner to go check that out. I'll just mention here briefly that I still think Flux Power is 300% undervalued. I think the fair value of the company is around $20 per share, and we're at $5.50 per share. So I think the upside here is still tremendous. If you want access to my price target spreadsheet so you can come up with your own valuation for these companies, or you want access to my buy and sell alerts, all of that is available to my members in the Discord server. So hit the join button down below located right next to the subscribe button, or hit the Patreon link in my pinned comment. Would love to have you join. It's the cheapest membership on YouTube, and it's the best membership on YouTube. Moving on to stock number 2, we have PayPal. This is one that I've been buying relentlessly anytime it touches the $50 range. I think this is the best value play in the entire stock market right now. PayPal has a market cap right now of just $63.5 billion. And I always think it's funny, the bears out there like to argue that PayPal is a declining business, which is just flat out false. I mean, the company's growing revenues at 10% plus every single year, which is crazy because the company is doing billions and billions of dollars of revenue. Over the last 12 months, PayPal has done $29 billion of revenue, and this is also a very profitable business. So the risk here is very low in my personal opinion. Their earnings, so their profitability over the last 12 months is $5.5 billion. Right now, according to Yahoo Finance, the company is trading at a forward PE multiple of under 11, when historically this company has traded at 25, 35, and even 45. They also have a very healthy balance sheet, and over the last 12 months, PayPal has repurchased more than 10% of their company from the open markets via their share buyback program. This is why I'm in such a hurry to buy PayPal stock. As the share price goes down, the company is able to repurchase more and more of the company for less money, meaning that when this stock does go back up, it's likely to do so more violently than it ever has before because there's less shares outstanding. The company was kind of put in a hard place coming out of COVID because COVID was the best case scenario for their company. With online sales surging, people used PayPal. But obviously, as we've been coming out of the pandemic, people have stopped purchasing items as much online, and they're starting to return to more purchasing things in person, which does hurt PayPal. And then after all of that, the company was beat up because people were so convinced that we were going to see a recession or some sort of debt crisis play out in America in 2023. And obviously that never happened, but the stock price has really yet to recover from that. As the economy continues to grow and more people start to believe that we won't see this recession play out, I expect PayPal stock to go up and go up quickly. The company also had a new CEO step in at the end of last year, and I'm very excited about him. I think he's going to reignite a lot of growth in the company. I'm sure most of you are aware, but PayPal also owns Venmo, and they also own Braintree. Braintree is the growth engine of the company as it stands today. And ultimately, this is just a really good business model. People know and trust PayPal. That's something that's very hard to obtain and earn. You can't put a value on that. And when people say nobody uses PayPal anymore, they're just mistaken, because people are using PayPal when they don't realize they're using PayPal because they're using Venmo or they're using Braintree when they check out on Instagram, for example. And you just know it's a good business when people are using your business business and they don't even realize it. Just like Flux Power, I have a more in-depth video on PayPal on my YouTube channel that I uploaded 4 months ago. You can click the eye in the top right-hand corner to go watch that video if you want more information on my thesis with PayPal. But I just updated my numbers this morning, and I view PayPal as 345% undervalued as it stands today. I'm expecting the company to repurchase around 5% of their outstanding share count every single year up until 2025. When we get closer to 2025, obviously I'll make a judgment on if that's going to continue or not. But yeah, this is kind of crazy. The company's trading for less than $60 per share, and for 2025, I view the fair value of the company being $262 per share. Keep in mind, this is based on a forward PE multiple, so I believe the stock should be trading at $260 by the end of 2024, so the end of this year. I've even been buying some December 2025 call options on PayPal stock. That's how much I believe in this play. So needless to say, I believe in PayPal and I'm buying a lot of stock, as much as I can get my hands on. And lastly, the third stock I'm going to be buying throughout 2024 is The Trade Desk. Now, this one is not nearly as undervalued as I view Flux Power or PayPal. This is just simply a very, very good business and a very low-risk investment. I'll show you my spreadsheet at the end of this, but I view The Trade Desk as being around 50% undervalued right now by 2025. So over the next year or two, I expect to see 50% return on my investment in Trade Desk. The easiest way to explain what this company does is basically they use their automated technologies to serve different ads to people on different platforms, whether that be a smart TV, your computer, whatever it is. They serve ads and they provide the platform for companies to serve those ads to a targeted audience. And being a YouTuber, I kind of get some inside information on the overall advertising market out there. And I can tell you that advertising is bouncing back very aggressively. You also have to consider that 2024 is an election year, and more money is going to be spent on advertising for the election than ever before. You can also look at Meta's earnings report, or basically any company that advertises out there, and they'll tell you that they're putting more dollars into advertising because consumers are ready to spend their money and it's worth it to advertise again. All of this benefits the Trade Desk. Obviously, when people fear that we might go into a recession, companies pull back their advertising dollars to save capital. But once again, similar to PayPal, Trade Desk has been hurt because people thought we would see a recession. If this recession doesn't come, the Trade Desk is severely undervalued right now, and it will go up very quickly in 2024. On the screen now is my price target spreadsheet for the Trade Desk. Again, this is made available to all my paid monthly members. But you can see, based on 2025's numbers, I view the company as being undervalued by 48% right now. I view this as a very safe investment. The Trade Desk is growing revenues. Analysts have them growing revenues at around 20% for the next 5 to 10 years. I have the company growing a little bit faster than that, around 30% in 2024, and then kind of slowing down to around 25% for the next 5 to 10 years. But regardless of whether you look at the analyst numbers or my personal numbers, this company is undervalued. This is another company with a share buyback program, not near as strenuous as PayPal's is, but they recently authorized around $700 million of cash to be used for share repurchases. The company itself views their company on the open markets as being undervalued. There's no better tell than that. And I do really like when companies implement share buyback programs like PayPal and the Trade Desk have, because it gives you kind of a backbone as an investor. Somebody is always bidding on the stock, and it happens to be the company itself. So it should prevent deep losses. I'm not saying the stocks can't go down, but there's a multi-$100 million buyer always sitting in the market. But with that, again, if you are new here or returning and not yet subscribed, please subscribe down below and hit the like button. Let's hit 500 likes. Also, don't forget to comment a stock you are going to be buying throughout 2024. With that, I hope you have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.